healthy business ecosystems and contribute to the advancement of science. We foster the spirit of sharing through community services and local business development in order to bring sustainable benefits. We innovate in the field of business for the initiation of business ventures by utilizing local wisdom. Realizing a lack of entrepreneurial mindset in Indonesia, Prasetiya Mulya claims the opportunity to expand the uses of knowledge in business and society. In its initiation, Prasetiya Mulya only provided an MBA program that was specially aimed for business practitioners and executives. As time went by, Prasetiya Mulya also committed to educating young entrepreneurs, professionals, or aspirants like you through practice-oriented undergraduate programs in business-related areas. Then, in 2016, Prasetiya Mulya grew as a university and involved the study of applied sciences, technology, engineering, and mathematics or STEM into their curricula. This was done as a response to the fact that those areas have advanced and become a huge part of today's human civilization. We know that collaboration is key. To meet the ever-evolving standards and the demands the industrial job field needs, we synergize our curriculum with both internal and external collaborative learning organized within the institution and with companies. Establish partnership with many companies and world-class universities bring more values to the learning process that are relevant with the current business ecosystem. Held in Chilanda campus, the graduate programs, Master of Management and Doctoral Program in Management and Entrepreneurship prepare to cultivate the next generation of Indonesia's executives and entrepreneurs. Universitas Prasetiya Mulya provides both full-time and part-time study programs that accommodate full-time employees into their own schedule. It offers various graduate business and management programs such as Master of Management, MM Regular, MM Strategic Management, MM Business Management, MM New Ventures Innovation, MM Applied Business Analytics. Our master programs suit individuals who wish to take strategic steps to escalate their careers. For those who want to seek self-actualization and contribution to the improvement of community problems through knowledge and research fields, may take our doctoral that consists of Doctoral Program in Management and Entrepreneurship. Since 2005, Universitas Prasetiya Mulya has provided undergraduate students with in-class learning and first-hand experience to develop their own businesses and strategies. The programs offered in the BSD City campus are School of Business and Economics, which consists of Accounting, Branding, Business, Business Economics, Event, Finance and Banking, Hospitality Business, International Business Law, Financial Technology, and School of Applied STEM, which comprises Business Mathematics, Computer Systems Engineering, Digital Business Technology or Software Engineering, Renewable Energy Engineering, Food Business Technology, Product Design Engineering. These programs implement unique and interactive learning methods, art-based learning, discovery-based learning, as well as project-based learning that are designed authentically to encourage the students to solve real society's problems, not just deal with theories and in-class lectures. This aim is achieved through the support of the latest and sophisticated learning laboratories. If we look into the statistics, 64% of Prasetiya Mulya alumni got their first job before graduation. Meanwhile, 35% waited for an average of 4.4 months before landing on a job. Employers were 100% satisfied with Prasetiya Mulya graduates. 27% alumni decided to become entrepreneurs. So, immerse yourself in an active learning environment that exposes you to industries, allowing you easy access to companies. Our library is designed to reinforce the learning process. You can relish your time to read and discuss in some cozy spaces. More than 10,000 e-journals, 5,000 digital books, and 45,000 physical books rest here to broaden your insights and knowledge. In the library, you can find various Scopus Index works by our faculty members. Additionally, Universitas Prasetiya Mulya also conducts digital blended learning. Students are able to access lessons anytime suitable for them. To support the latest trend in a flexible and dynamic learning environment, we have an AV or audio and video studio with virtual classrooms. STEMpreneur Center is also located in collaborative STEM laboratories, where students from both schools can collaborate with the other stakeholders, like faculty members, investors, practitioners, and the government to discover and develop technology-based enterprises. Aside from the infrastructure, Universitas Prasetiya Mulya will shape you into high-quality human resources who are adaptable to any industrial conditions and balanced in both soft skills and hard skills through many activities. Exhibition, competition, joint research projects, cultural festivals, and student exchange. Especially Students Exchange, you will be sent to study in our partner world-known universities like Boston University, National Taiwan University, Tsinghua University, University of New South Wales, and others. Universitas Prasetiya Mulya is also open for international students who wish to join our program. With our lifelong learning philosophy, we actively prepare students before facing real global business situations through their Career Development Center and Alumni Network Ikatan Alumni Prasetiya Mulya or IKAPRAMA. Sharing sessions, talent scouting, workshops, consultations, and various social events are held as a helping hand for students. Because Universitas Prasetiya Mulya believes that doing is more important than just knowing. Universitas Prasetiya Mulya, collaborative learning by enterprising.
Good afternoon, ladies and gentlemen. Welcome to discussON 2021 SBE webinar series number 2. My name is Owen, a 2019 undergraduate student of Universitas Prasetiya Mulya, majoring in finance and banking, and I am your host for this afternoon's event. It is such a great honor for our committee to have you here with us. Thank you so much for coming. And let me begin by giving you a warm welcome to discussON 2021 SBE webinar series number 2, Battling the Myth of Asia's Stock Market, the Past and the Future. I, on behalf of the committee, would like to welcome Professor Agus Soehadi, PhD, Vice Rector 1 of Universitas Prasetiya, who will be giving the executive notes. And welcome to all speakers, Mr. Herald, book author of Asia Stock Market from the Ground Up, Mr. Agus Salim, faculty member of Universitas Prasetiya, Mr. Rafitrandi, researcher at Department of Economics, Center for Strategic and International Studies. And last but not least, welcome to all audiences from around the world, Singapore and Philippines. And for a brief information about today's event, discussON 2021 SBE Webinar Series number 2 is a discussion forum to reunite practitioners, educational facilitators, and book authors to discuss the most current topics in business, economics, tourism, and other crucial industries. This is an annual webinar event that comes in several series. Before we enter today's discussion, everyone is kindly asked to abide to some regulations as noted on the screen. And here are the webinar regulations. All participants' microphones will be muted upon entering the Zoom meeting. All participants are suggested to keep their cameras on. Please make sure to be properly dressed and to deliver a polite manner during the webinar. All participants are expected to stay until the end of the webinar while maintaining orderly manner to ensure a conducive webinar. All questions during the event can be directed through the Q&A feature using this format. Your name, / your institution's name, / question is directed to, / question that is asked. English or Indonesian language are both allowed in asking questions. All participants are allowed to share their opinions during the Q&A session through the chat room. All opinions should be expressed with orderly manner. E-certificates will only be awarded to participants who have completed their feedback forms. The feedback link will be distributed at the end of the Q&A session through the chat room. All feedback forms are to be submitted by Friday, 3rd December 2021 before midnight, GMT +7. As an additional information, this webinar is also airing live on Universitas Mulya YouTube channel. If you happen to face any technical errors and problems in Zoom, you still can access this event through those live streams. But I do hope today's event will run smoothly. To start off the event, let's welcome Mr. Andreas Subakyo, Director of Teachers Academy Periplus Education, to give his opening speech. Mr. Toto, the floor is yours.
Thank you so much, Mr. Owen. Good afternoon, all the distinguished speakers, the Civitas Academica of Universitas Prasetiya Mulya, and all the audiences wherever you are now. My name is Toto Subagyo, and on behalf of Periplus, please allow me to express our appreciation for the opportunity as well as the honor to work with Universitas Prasetiya Mulya on this event. Thank you very much. About a year ago, Periplus had a virtual discussion based on Herald van der Linde's book entitled Jakarta, History of a Misunderstood City, published by Marshall Cavendish in 2020. The book has made Jakarta, with its old buildings, its history, its dynamic subculture, and so on, more human, more alive and lovable. Not only does it help people connect to the past, but also to understand and appreciate what is now with an inspiring future outlook. Now, Herald, the same author, comes up with his new book, Asia's Stock Market from Ground Up, also published by Marshall Cavendish last month. Congratulations, Herald. The author invites us to understand the landscape of stock market in Asia. He skillfully makes the so-called lay people, just like me, to learn more about the topic. Just like the previous book I mentioned before, Herald also invites us to connect to the past as well to the future, while firmly stand on the ground, here and now, what to do. Moreover, Herald gives his personal touch by including some anecdotes from his own experiences. So, have a very fruitful discussion, critically probing the ideas as well as the accounts presented in the book by the author. Thank you very much.
Thank you, Mr. Toto, for the speech. Now let us continue to the next session. Before we start the main session, let me invite Professor Agus Soehadi, PhD, to give the executive notes. Professor Agus, the floor is yours.
Okay, thank you, Owen. Yeah. Good afternoon, Mr. Herald Linde, the authors of Asia Stock Markets from the Ground Up, Mr. Toto Subagio from the Periplus, and the speaker, Linde, Rafitrandi, and Agus Salim. And good afternoon, everyone. It's an honor for me to give an executive note in this event. It is an interesting topic in the second SBE webinar series, Bettering the Myth of Asia Stock Markets, the Past and the Future. One of the interesting phenomena in is the numbers of millennial generation who invest in the stock markets increase significantly. Currently, most of them is unexperienced investors. And in terms of size, it could be not as big as baby boomers or X generation. However, in the near future, it will be dominantly by millennial generation. It will impact the financial industry, especially the way they consume the products and services. I will focus in these angles. Asia is the world consumption growth engine. A 10 trillion consumption growth opportunity over the next decade. By 2030, 3 billion people, or 70% of Asia's population, may be part of the consuming class. However, Asia's consumer markets are changing dynamically. According to McKinsey Global Institute, or MGI research, finds that there are three major shifting are playing out across the region. One, as income rise across Asia, more consumers will reach the highest tiers of the income pyramid. Two, cities will continue to drive consumption growth. Interestingly, the source of growth are increasingly diverse cohorts within the cities, such as Gen Z gamers in Surabaya, career moms in Jakarta, and lifestyle indulging digital natives in Bandung. Three, new consumption curve are emerging in specific categories, such as 15 to 25% of value in the banking sector may shift to new consumption curve. Apart from the three major shifting, the new growth angles are emerging in financial services. Accordingly, that eight new relevant angles relevant to the financial services. One, the big convergence. Super apps emerged in China, but are now prevalent across Asia. Two, new notions of ownership. More than 60% of adults in China and Japan have at least one subscription for online access service. Three, rise of digital natives. It may represent 40 to 50% of total consumption, with greater willingness to take a consumer debt, but less prone to engage with the conventional banking products. 5. F4, new channel mix. Asia's share of active digital banking users increased to 88%. However, only 20 to 30% acquired banking products. 5. Segment of one. More than 45% of survey consumers in China, India, and Thailand say they share their data for personalization compared with less than 30% in Europe. And 6, women's economic empowerment. 30% additional consumption could be at stake due to the empowerment of women. 7, aging. Senior consumption will grow 1.5 to 2 times faster than the consumption growth of the general population. And 8, eco-responsibility. More than 50% of survey consumers in Asia change products and services due to they buy out of concern about climate change. The finding is interesting and will impact the way firms to respond to the new consumption. Firms need to prepare for the next decade of competition as Asia consumer landscape reshapes. At least 3 key actions firms may need to consider. 1, redraw your growth map. Redraw your growth map. Firms may need to rethink how demand for their products and services likely to evolve, and to look carefully at which the growth angles are relevant to their businesses. To increase your agility, with a refreshed growth map, firms may then consider adopting a more agile operating model and increasing the speed of innovation in order to get to market more quickly. 3, open up. Firms not only need to be agile, but also need to take an open networks approach. Firms need to decide whether to lead their own ecosystem or participate in an existing one, depending on which role they could fulfill most effectively. In short, I can conclude that Asia dynamic consumer markets require financial services firms to increasingly understand and learn how to serve markets that are changing radically. Thank you to Periplus publisher to support this event. Thank you to Eko Dolianto and Penny Zulandari for organizing the event, and enjoy the second SBE webinar series. Thank you.
Thank you, Professor Agus, for the executive notes. Next, our main session will be led by our moderator, Ms. Aulia Nurul Huda, faculty member of Universitas Prasetiya Mulya. Before I invite her to join on stage, let me have a brief introduction about Ms. Aulia herself. Ms. Aulia received her master degree from Institut Teknologi Bandung. Her expertise in investment has led her to become investment advisor to Regional Government of West Java in 2018. She also has great interest in fintech and has joined the research team in establishing policy regarding cryptocurrency in Indonesia. She is also an ESG investment specialist and has become lead consultant at the index since 2019. Please welcome our moderator for today's discussON, SBE webinar series number 2, Battling the Myth of Asia's Stock Market, the Past and the Future, Ms. Aulia Nurul Huda. Ms. Aulia, the floor is yours.
Well, thank you, Owen, for the kind introduction. So it is an honor for me to be here and become the moderator of this wonderful discussion. So without further ado, I would like to start our discussion. So good afternoon, ladies and gentlemen. Let me first introduce myself. My name is Aulia Nurul Huda, and I would lead and moderate the keynote speech session this afternoon. In this wonderful opportunity, we will discuss the topic of battling the myth of Asia's stock market, the past and the future. We will try to correlate this topic to the book titled Asia Stock Market from the Ground Up. The objective of our discussions is to evaluate the topic from our keynote speaker perspective and expertise. It is not to judge or review the book content. It is now my pleasure to introduce our keynote speaker here. First, we have Mr. Herald Linde. He is the SBE Chief Asia Equity Strategist, also known as the Flying Dutchman, given his frequent travels around the region. He and his Indonesian wife are based in Hong Kong and Jakarta. He is trained as an economist and wrote his master's thesis in Jakarta and made Jakarta his home. He later worked as a strategist in South Africa and Taiwan before he became HSBC Chief Equity Strategist for Asia. Pak Herald is a charter holder, a member of the advisory board of the Chinese Studies program at Hong Kong Baptist University. He speaks 7 languages, including Bahasa Indonesia, and is a certified lecturer for the Wine and Spirit Education Trust. He published a book on wine in 2012 titled A Good Year to Learn About Wine, and one on Jakarta history in 2020, titled Jakarta, History of Misunderstood Beauty. And of course, he also the author of the book that we will discuss today, Asia Stock Market from the Ground Up. Good afternoon, Pak Herald.
Thank you very much for the kind introduction, Ms. Aulia, and also thank you very much to Agus Soehadi for the introduction, Pak Toto and Mas Owen Lim, who did the very start. I'm going to share my presentation to talk about Asian stock markets in a second, and I hope this is visible to everybody. I just put some QR codes here for people that might want to look up the book, but what is key, I want to talk a bit about the history of markets, because quite interestingly, Indonesia actually stands at the very base of the start of stock markets. And I'm using that a little bit to explain how we approach stock markets, which is a tug of war, and then we're going to look at all the key stock markets across the region, and highlight some of the big themes, and if we have time, also look at what has happened in 2021. But I'm going to start a couple of 100 years ago in 1602, when people gathered together and started to finance expeditions. These were the Dutch and the Portuguese expeditions to what is now Indonesia, to buy spices in the renowned spice islands in the Moluccas. The Portuguese were the first to go. The Dutch came a little bit later. They had individual expeditions whereby people came together, got a ship, and then sent it off. The problem was, of course, that that ship could be shipwrecked, could get into a storm, it might not come back, and you would lose all your money. And they made 2 changes to that. In 1602, they decided that instead of people buying individual ships or groups of people doing so, they put everything together in a company that would finance all the expeditions for the next 22 years to Indonesia, or what is now Indonesia. So they all came together with the obvious benefit, not only that you basically, if one ship would go, other ships would survive and bring back spices that could be sold, so your risks were much lower, but also you now had a right to all the dividends that were going to be paid for 22 years. And actually after 22 years, they extended it for what eventually became 200 years. So you had a stream of dividend payments coming through. I'm going to go back to this in a second. Initially, they actually traded these shares on a bridge. This is a painting somebody made in 1618 of Amsterdam. That bridge is there in the very front. They traded shares, but if you've ever been to Amsterdam or London, it is pretty bad weather they have here. It rains all the time. So they needed a building. And eventually they built a building where you could not only buy stocks, but also commodities and these things. And that building is also there on this particular picture. It's called the Beurs. And it's in the back, you can see the S is a little bit gone, but it's on the in the back on the left of this particular painting. And this was the very first, purpose-built stock exchange in the world. Now, the French thought this was a good idea. They took it over. The London people took it over as well. The London Stock Exchange soon became much bigger, actually, than the Amsterdam one. The Americans thought it was a good idea. And the first stock exchange in 1880 appeared in Asia, in India. What is maybe interesting to show as well that the oldest share certificate in the world is still around as well. This is one of the original share certificates issued in 1602. Actually, this guy only picked it up in 1606. We're not quite sure why. And on one of the papers on the front, this is on the left, you can actually see his name if you would read Old Dutch. But it basically says that a particular gentleman had put 150 guilders. That's about, say, 75 euros at the moment, but it was much, much more in those days, into this new enterprise. And you can see on the next page all the years and all the sort of dividends that he arrived. In 1634, for example, he got a bag of nutmeg and cloves that had arrived out of Indonesia. Now, this is all nice and well, but I use this a little bit to explain to people how to think about stock markets, how we think about stock markets. You know, in a sense, it is a large discounting machine. It is a very large group of companies that all generate profits and dividends. But of course, the profits and dividends that come into the future are less valuable to us than the ones that would be paid this year or maybe next year. And therefore, we need to discount those. So there are two things that play really in stock markets. It's the stream of profits or dividends that are coming through and the discount rate that we attach to those future profits. And those two are really the way we look at stock markets. If anything happens in stock markets today or tomorrow, and people in the bank ask me or HTBC clients ask us, what are we going to do? What do you think the impact on the market will be? I look at what is the impact on profits, and I look at what is the impact on discount rates. And discount rates are in essence just bond yields. Now, if that's our framework that we're going to look at stock markets, how has that fared over the last kind of 20 years or so? Now, average Asian earnings growth has been quite robust. It's about 13% over the last 20 years, pretty good, but quite volatile, as you can see on the left-hand chart. So that's good. And the bond yields, the discounts that we attach to future profits, has also come down. You can see this on the right-hand chart. And that's also positive. So net, yeah, that suggests that actually this should have been positive for stock markets. And indeed, Asian stock markets would have gone up. If you would have invested $100 in 2001 on the 1st of January into Asian stock markets, you would have actually, I'm going to actually go to the slideshow here, because I see now that I'm still in the old view. You would have had now something like a little bit less than the US, $510. If you would have put the money into the US market, the S&P 500, you would have made $570. So a little bit more than that. But that's actually not a fair comparison. And I'll show you that in a second, because Japan and Singapore haven't done so well, and many other markets, including the Indonesian markets, have actually done much better than this. Now, these are the markets in Asia that we're going to look at in comparison, how much they trade and how big they are. You can see the US is still the biggest market compared with all the other markets we have in Asia. But if you put China and Hong Kong together, well, you're getting something that's not far off. Japan is sizable. Taiwan and Korea are a bit smaller, but are actively traded markets. A lot of local retailers are active in there. India is big. And then you have the ASEAN markets, which are all of them growing, but a little bit smaller as well. And one of them that actually deserves attention is Vietnam here, because that one is growing quite rapidly as well. Now, we can talk about all the individual markets, but what I'm going to do is to globber them together, to put them together in groups, because there are certain markets that, although they are different, they look alike in the way they behave. And that's I try to illustrate in this picture with the dogs. And we typically look at correlations between markets to identify that. And roughly speaking, there are 4 blocks of markets. You got the mainland China block. Hong Kong fits in there as well. Singapore you could put in there. You got the North Asian market, Korea, Taiwan, Japan probably fits in there. A bit of a special case. We got the ASEAN markets, and we're going to, of course, talk about those. And India is a bit of a standalone as well. So we're going to quickly tour through all of these. Now, the way to think about the Chinese stock market starts actually with me, myself, backpacking in Asia. This is a picture from 1990. This is not China, as most of you will know. This is the Bromo in East Java. But I use this as an illustration. I was backpacking around. I traveled through Indonesia, had a phenomenal, fantastic time, and also traveled through China in that year. What happened in China, my first day in China was a rather disastrous one. I got robbed in the morning, and I was in a plane crash, not a major crash, but the plane ended up in a paddy field in the afternoon. The important thing is not so much that plane crash, but actually that I got robbed in the morning, because this is what happened. I come into China with my US dollars. I went to a bank, but in those days, China didn't give you renminbi, the Chinese money for Chinese people. They would give you Chinese money for foreign people, called FEC. So I exchanged my dollar to FEC. But the Chinese, they want these FECs because they can use that to buy televisions and all sorts of things in Hong Kong at the time. So somebody, when I was putting my FECs in my small pouch, said something to me, hit me on the nose, and stole my FECs. So I learned that lesson very quickly. I had to go and change my money again. Or I think it was 125 US dollars. But I learned the lesson, they want that money. So what I did is exchange that for the renminbi. But the lesson here is that there are two kinds of Chinese money that are going around. Money for foreigners and money for locals, if you want to put it like that in China. And so it is a little bit with the stock markets in China. There's more than one stock market in China. You got markets that are in mainland China. That's the Shanghai market, called the Asia market. And the sub-market is a star market, it's kind of a tech market. And you got the Shenzhen market. They trade in renminbi most of the time. And then you have companies, Chinese companies that are listed outside mainland China. And I include those here, Hong Kong, we call them HES. But it can actually also be Singapore, Frankfurt, or anywhere else they are. Or if they trade their stocks in the US, and then we call them ADRs. Why is this of importance? Because these markets are different. I'm going to show you this. But even if there is a company that is listed in Shanghai and Hong Kong, the money that flows around in these markets, so the bond yields in these markets, differ. Remember, I said that stock markets could be seen as a discounting machine whereby we look at profits and bond yields. If you have a company that is listed in Shanghai and Hong Kong, the profits are the same, but the bond yields differ. So the share prices can still move in opposite direction. And that's exactly what has happened over the last couple of years. Now, would you have made money if you had gone into these markets? Actually, yes, you would have. In China, Shenzhen, you would have made $700 out of your $100 invested. 2005 this is. Shanghai, 668. And in Hang Seng, the China companies listed in Hong Kong, HSCEI, we call that 402, so much less so. So these markets have moved actually quite differently over the years. The key reason why these markets move different is not only because the bond yields are different, but also the composition of the stocks differ quite a lot. In the Chinese companies listed in Hong Kong, tech companies, Meituan, Tencent, Alibaba, Xiaomi belong to the top 5 here. And there's one bank in there. Those are all big tech companies. The key companies listed in Shanghai, Guiqiao, Moutai is a liquor company. There's then a bank, there's an insurance company, there's a green technology company, industrial company, and then there are other kind of industrial companies below that as well. So the nature of these markets differs a lot between Hong Kong and Shanghai. So not only the stream of profits of the Chinese companies in Hong Kong differs from Shanghai, but also, as I mentioned earlier, the bond yields. And therefore, yeah, these markets can move in different directions. If people tell me, what do you think about the Chinese market? I have to ask them, which one are you talking about? Because I can see that Hong Kong can go down and Shanghai can go up. Actually, that pretty much happened to a large extent this year. Very much because very different companies are listed in these markets. And you can see that a little bit here as well. The Asia market has got more kind of industrials. That's the kind of light, khaki kind of colored segment here. While the Hang Seng China Composite Index, HSCI, the Chinese company listed in Hong Kong, are much more related to finance or tech in general. And therefore, you get very different dynamics and very different concentration and very different also correlation between these markets. Shenzhen has got a very low correlation, for example, with the S&P 500. The Asia market in Shanghai as well, the HSI actually much higher. that's important to think about these markets. And if you invest in these markets, we've got to think about a couple of things that are playing a key role. And particularly in Hong Kong, a key theme is what we call homecoming. A lot of tech companies, that mainland Chinese companies listed in the US or traded in the US, they are now listing in Hong Kong because of some accounting rules changes in the US that makes it very difficult for them to be listed there. So the Hong Kong market is actually going to move more and more towards a NASDAQ of Asia, a NASDAQ of the East in the next couple of years. There's a couple of other key themes that are really important as well if we think about investing in China in particular. One is the standoff between the US and China. It means that China is promoting growth in industries that are strategically important to them. Think about tech, semiconductors, food, and energy. So those industries are provided with a favorable environment and growing very quickly. So that's something you can invest in. Another theme is aging in China, but older people have more wealth. So the wealth management industry is growing quite rapidly there. I think this is something that will happen in Indonesia in the future as well. And another very important theme that you can invest in, for example, buying consumer companies, is what we call Chinese empty nesters. Chinese are, as they age, they have one child. The children are leaving after they've finished school or university. Women tend to work in China, so they got a dual income situation. And these two people don't have to take care of their kid anymore and are in a very comfortable financial position. And what do? They don't buy cars or apartments. They got that already, but yeah, they go to better restaurants. They want to travel. They buy luxury. They want to buy a nice bottle of wine. They do home improvement. And it's these sort of companies that over in particular next decade, I think people should be investing in to benefit from this particular trend. Now, having discussed those, quickly we go to North Asia, Korea and Taiwan. Japan fits a little bit into this as well. These are tech markets. These are just the top 10 names in those markets. Those are the ones that generate most of the profits in these markets. It's important they drive these markets. Samsung is really big. You can also see Hynix in Korea. It's a DRAM producer. And in Taiwan, you got TSMC, which is his chip maker. The key of the story here is that these hardware technology companies account for at least half, if not 70% of these markets. And they sell their products into the US, into Europe, and into China. So what happens in the local economy, in Taiwan in particular, is almost of no importance to us. We have to see what is global demand in order to understand what happens with these markets. And therefore, these markets tend to also have a very high correlation with what happens with the S&P 500, the US stock market. You can see that here in some of the numbers. But that correlation is further exacerbated, you could say, by a very high concentration, almost 60%, in particular in Taiwan, of some of these tech companies. They make up 60% of all the profits in that market. So those are kind of global cyclical markets, I would say. They've performed pretty good over the last couple of years. You would have made about $500 from your $100. Remember, in the US, you would have made about $570. So not far out. Taiwan has done a little bit less, but that's really because in the very early years, it didn't really move anywhere in the early 2000s because it came out of a tech bubble it was apparent in 2000. And then I'm going to quickly look at India and ASEAN. And I've put this a little bit together because there are a couple of interesting similarities here. We can understand maybe ASEAN market by also looking at India to a certain extent. India is a vast continent that is extremely diverse. I tried to illustrate it with all kinds of demographics here. We don't really have to go into detail into that. But this is important because you've got to understand the different localities in India, south and north and east and west and the center. The way people live, marry, what they eat, it differs all very much. Now, the top 10 companies in India is really a mismatch of all kinds of companies. Oil is the number one, a bank, a tech company, a software company, then another bank, then another one. There's another IT company called Tata. You can see two larger domestic-oriented companies, a paint company and Unilever. India, and this is the key message, is the most diverse market in the region. It's got pretty much everything. It's got global players and it's got local players. And they are almost equal in size. And this is important, because it means that if domestically things are not doing so well because of the economy, the stock market can still do good insofar the exporters do well. And if the exporters don't do well, it might well be that the domestic market does well. So that balances some of the risks out in India, and it made it actually one of the best performing markets over the last 20 years or so. The key of the story in India is that most people still live very rural. So you need to buy companies that can distribute to rural localities, and that is not easy in India. And some companies have an incredible network, a distribution network, and have turned themselves into the most profitable companies in Asia. Foreign companies try to come in. There's a couple of headlines that suggest that, but they really struggle to do that. So there's very high barriers to entry in that particular segment. And then they have IT and pharma, which are global industries, as I mentioned earlier on. And these companies have done phenomenal well and really helped India to become one of the best performing markets in the region. And then you can see here, $100 invested in 2000 would now be $962. So that would have done really, very good. But this is important because some of these themes play in ASEAN as well. You can see here, this is a picture of a street in somewhere in Central Java. I suspect it's Yogyakarta or something like that. But again, ASEAN is big and it's got a lot of consumers, but they are spread out over the Indonesian Philippine archipelago. And in order to get to these consumers is very difficult. But if you can do that, just like in India, you can become very, very profitable. And some companies have successfully arranged that. Now, what is happening, of course, is that in the past, this was really difficult. But in the future, this is changing because some larger tech companies have figured out how to do this. I'm going to finish it up right now.
Okay.
And some larger tech companies are going to be listing very, very, very soon. So that is diversifying this market. The key of the story in Indonesia is that it's actually still a very traditional market with kind of food companies and banks. The earnings volatility is one of the lowest in the region, but the market moves a lot. The earnings don't move a lot. It's the bond yields that are very volatile. So investing in Indonesia, you have to look at what happens with global bond yields. And if they go against Indonesia, that is sometimes a very good time to invest in that particular market. Now with that, I now get signals that I've run over my time. So I'm going to stop right here. And if there are any further questions, we can look at it. But as you can see here, Indonesia has been one of the best performing markets over the last 20 years or so. And with that, I'm going to stop sharing it and pass it on to the next speaker.
Thank you, Pak Herald, for the very insightful presentation. It is very interesting to learn the different characteristics of stock markets in Asia. But I do hope that we will have more opportunities to discuss more about that. So for now on, let's move on to our second speaker. Our second speaker is Pak Agus Salim. Pak Agus Salim is a faculty member in Universitas Prasetiya Mulya. He received his master and doctoral degree from Universitas Indonesia, and he has past experience in Indonesia capital market, as he was once director of PT CIM Principal Asset Management and PT Bosrip Asset Management. Pak Agus Salim is also CSIS charter holder. So if Pak Herald talks about the characteristics of different Asian markets, then Pak Agus Salim will try to discuss more on the individual investor perspective. So what should we pay attention in investing in stock, and how can we become a wise investor? Pak Agus Salim, the floor is yours. Before Pak Agus Salim starts, I just want to add that Pak Agus will deliver his presentations in Bahasa, but we do provide the interpretation function. So if you want to activate this interpretation function, just go to the menu and then just put the interpretation function and active. So Pak Agus, silakan.
Terima kasih, Bu Aul. I'm really sorry. I should be delivering in English, but because my English is not really good, so probably better if I try to talk in Bahasa Indonesia. So I hope with Bahasa Indonesia I can deliver my presentation better than in English language. Baik, terima kasih buat Pak Herald atas bukunya. Saya sangat menikmati membaca buku tersebut. Dan saya sangat menikmati bagaimana Pak Herald bisa menceritakan tentang pasar equity yang mungkin untuk sebagian orang sangat kompleks, jadi sangat sederhana dan menyenangkan gitu, dengan pengalaman beliau berkeliling ke berbagai negara gitu ya, ke Indonesia, ke Cina, ke Taiwan. Saya sendiri di Indonesia saja mungkin belum pernah ke beberapa tempat yang sudah dikunjungi sama Pak Herald gitu. Jadi saya termasuk orang rumahan gitu yang sebetulnya Inggris dengan work from home ya, karena memang jarang jalan-jalan. Oke, saya akan share screen saya. Jadi tadi kita sudah mendapatkan banyak insight dari Pak Herald terkait dengan, sudah kelihatan ya? Kemudian sudah kelihatan. Saya coba. Karena di tempat saya belum kelihatan. Maaf. Ini dia. Oke, ini sudah kelihatan. Ya, jadi saya akan mungkin karena sudah ada
So
Herald,
we're going to start.
Pak Dendi ya kalau nggak salah ya Pak Dendi yang akan menyampaikan hal-hal yang berat dan serius tentang.
So Mr. Dendi is going to be the person who is going to explain most of the, who is going to be doing the most of the heavy liftings with most of the serious materials.
Mungkin bisa memberikan insight dan mungkin buat yang.
But I'm going to start with the insights about
investasi bisa menjadi pengingat kembali, refresher gitu ya. Saya akan mulai dari apa sih itu investasi? Pada dasarnya kita
I'm going to start with what is investing.
Uang itu mempunyai nilai yang
investing
seiring dengan waktu.
Is always related to money, and money has always related to time value of money in the finance of industry.
Agar kita berkesesuaian dengan.
So we have to grow our value of money, and there are a lot of aspects that would affect money's value.
Inflasi, di mana kemudian
and one of them, the main factor is inflation, where the price of goods in general would increase, affecting the value of money.
Dengan demikian, investasi itu adalah satu upaya agar
therefore investing is one of the most important method to protect our value of money and result in a passive income that would increase our value of money and protect it against inflation.
Lalu kemudian apa bedanya investasi dengan saving, gitu, dengan simpanan? Tentu saja semua
So
mulai
what
dari
is
saving. Kenapa?
the difference
Karena
between
yang
investing and
namanya saving
saving?
itu adalah bagian dari uang kita.
Everyone
yang
always
tidak
starts
kita
with saving.
pergunakan. Ya, jadi tidak kita konsumsi.
Saving is setting aside some money that we do not
Dari
use,
saving tersebut yang biasanya nanti kita gunakan untuk
and
keperluan darurat barangkali,
those
atau
savings
kita
would
simpan di masa
generally
yang
be
akan
used
di periode
in
berikutnya.
future
Karena kemudian bahwa uang
activities.
yang kita simpan tadi mungkin nilainya berkurang seiring dengan waktu, maka kita butuh untuk invest.
Most of the
Jadi dengan
time when
investing
the
tadi,
price
uang yang kita
of goods
saving bisa berkembang.
raises,
Setidaknya seperti saya sampaikan
those
tadi,
savings
bisa
could be used to
mengikuti
protect it and
bagaimana perubahan nilai
can be
dari,
used to consume goods in the
mata uang
future.
tersebut seiring dengan waktu. Nah, kemudian kalau kita mau investasi gitu, kita mau investing, kira-kira apa sih yang pertama kali harus kita lakukan?
Then how about what should we
Sebagaimana
do if
kita
we want to
menjalani
invest?
kehidupan ini, tentu kita pertama kali ketika kita menjalani, kita perlu melakukan refleksi. Kita perlu melakukan refleksi.
If we want to do it for the
seperti apa
first
diri
time,
kita.
we should reflect
Jadi
on
ketika kita
ourselves.
mau berinvestasi, kita perlu tahu bagaimana tentang diri kita.
The first time
Terutama
we're investing, we
dikaitkan
need to
dengan
know about ourselves.
bagaimana kemampuan kita beradaptasi dengan risiko
How
yang akan
about
kita
our
ambil
ability
ketika kita berinvestasi.
to
Karena yang
face with the
namanya,
risk, which is reflected on the
itu,
investment that we're going to
mungkin
do.
yang paling terkenal jargonnya adalah di mana ada
Most important, most common example, where there is risk, there is return. And as everybody knows, high risk, high return, and low risk, low return. So that should reflect on how we are going to do our investment.
Lagi untuk apa sih kita mau investasi gitu ya.
And then the second one, we're going to take a look at what is the purpose of our investing. Whether it is related to our growth of money, or even we have some specific purposes. For example, for some marriages purposes, education for children, or even for retirement planning. Sometimes other people even have some goals to buy Ferraris, some supercars. Everybody has their own purposes in investing.
Sangat generous gitu ya, dia ingin investasi untuk agar supaya selalu bisa memberikan kepada orang lain gitu ya.
Or even some people invest so that they can give back to the communities, to people that is in need for their money.
Ini untuk apa? Dan kemudian bagaimana batas toleransi kita.
So in a nutshell, we need to
hal tersebut,
know for sure, specifically what is the purpose of why we do our investing. And from that, from knowing our risk and also what is the purpose of our investing, then we can build our own investment policy statement or IPS.
Kita harus bisa membuat suatu rencana gitu terkait dengan investasi kita. Jadi sangat penting.
We need to be able to do to make a planning for our investment.
Kemudian kalau kita tidak membuat suatu perencanaan dari awal akan sangat mudah kemudian
because if we do not do our planning,
dan kemudian ketika kita tersesat, kita mengalami kerugian, bisa jadi itu menjadi traumatik gitu.
It could be a guide for us to do our investing, to make sure that we're not lost in the world of investing, which is complex. So that's why we need a planning in the beginning, which is called the investment policy statement.
Kita tetapkan objektif kita apa. Jadi ketika kita sudah punya fokusnya, kita punya batas toleransi kita
seperti apa,
sehingga kita tahu risk-adjusted return kita.
Ensure is what is our purposes on this investing.
Melakukan
why we do our investing is very critical to the IPS.
Saya seperti ini sehingga saya akan bisa mengharapkan return saya seperti ini. Jadi ini objektif.
From that purposes, then we can determine what is the expected return of our investment.
Jadi sumber dari uang kita dari mana gitu ya.
How much
apakah kita bisa menyisihkan?
We expecting for this
kita tentu tidak bisa
investment.
berinvestasi kalau kita nggak punya uangnya gitu ya. Jadi sumber uang
And then
kita
the
dari
sources
mana?
of income would actually affect the IPS in an important manner as well.
Kita memiliki yang kita bisa investasi.
Whether it comes from
Kemudian
our
adalah berapa lama kita
main
akan
income, which is from wages or from our wages, and it would determine how we're going to invest, whether it is periodically or just in a lump sum method in one-time manner.
Dan terakhir terkait dengan liquidity. Jadi seberapa butuh kemudian nanti kita perlu untuk mencairkan investasi kita.
The second one is related to horizon, where when are we going to
maka pilihan dari
want
asetnya pun nanti akan sangat
to reach the end goal, which is the purposes at the end of the time. And the last one is related to liquidity. When we are going to use the money, is the asset will be going to be able to be liquidated at a timely manner, or whether it's going to take a longer time to be liquidated.
Sendiri gitu ya.
And the last one, this is related to the strategy of investing, whether we are able to do it by ourselves or we're going to need some guidance from expert in investing, such as financial manager. And the second strategy is always also related to the asset allocation, whether we're going to
instrumen investasi
allocate our
sekuritis apa yang kita akan investasi.
Investments such as stocks, bonds, or even deposits.
Nah, kita
and
masuk
last
ke dalam
one after we
strategi.
the security itself from
Yang
the
pertama terkait dengan melakukan alokasi terhadap aset kita. Jadi
on to the next, we're going to take a look at the strategies on our investing.
Mengalokasikan dana investasi kita kepada aset kelas yang ada.
Asset allocation involves dividing an investment portfolio among different asset categories. That could be divided into two major categories, which is non-financial assets and financial assets.
Tentang portfolio dari aset finansial. Walaupun kalau kita
and during this time, we're going to focus more on the financial assets, such as bonds, stocks, and cash.
Termasuk dalam hal ini adalah aset non finansial. Contohnya mungkin kita punya properti gitu ya.
For example, we have may have other kind of investment assets such as financial assets such as property or real estate.
Untuk membeli lukisan barangkali.
Or others have some hobbies related to collecting
juga termasuk salah satu
paint.
Dari investasi yang non finansial. Lalu kemudian yang finansial yang seperti apa?
And then some others are more heavily focused on the financial assets investing.
Dan pasar uang. Pasar uang ini deposito dan sebagainya. Nah,
the financial assets also includes money market instruments such as the money, such as notes or even short-term debt.
Kalau kita lihat dari profilnya, mungkin bisa lebih cocok kalau kita masukkan ke dalam aset finansial gitu ya, karena
how about cryptocurrency? Cryptocurrency, looking at its characteristics, will be more suited to be included in the financial asset side.
Kemudian objektif kita, maka kita akan mengalokasikan kepada aset kelas tersebut. Sebagai contoh,
if we have decided on our risk objectives and also our purposes on our investment, then we could be more easily to allocate our investment on different kind of asset allocation, such as the financial assets such as bonds, stocks, and cash.
Kalau kita lihat bahwa kemudian semakin panjang waktu investasinya, maka kemampuan untuk melakukan aset alokasi kepada aset-aset yang berisiko tinggi juga semakin besar.
Then, if we have some risk appetite which is looking for more risk of on our investment, then we could we would allocate more on a high risk investment.
Yang berisiko seperti katakanlah saham risiko tinggi gitu ya, kemudian ada yang berisiko menengah.
For example, if we do like a high risk investment, then we would allocate more on the stocks investment and maybe do some diversify on bonds and some small part of bonds and small portion of cash.
Susah kan kita beli obligasi di mana? Ya kalau seperti di Indonesia, contohnya pemerintah selalu menerbitkan secara rutin obligasi yang dijual kepada retail gitu ya, ori ataupun sebuah retail.
How about bonds? Bonds in Indonesia, bonds are mostly
obligasi korporasi yang dijual untuk retail. Tapi kalau
bonds, government bonds in Indonesia are one of the most known and most common terms on investing in bonds because it is made by the government of Indonesia and it mostly comes in small values such as the ORI or SBN asset known in Indonesia for the retail investors.
Kita berbicara tentang investasi di saham. Jadi ini yang biasanya kita sebut.
Now we're going to take a look at the focus on our stock investing horizon.
Ada yang namanya top down dan ada yang namanya bottom up. Kalau kita bicara top down, kita mulai dari bicara tentang
so in the strategy of equity investing, there is two main strategy, which is the top down analysis or bottom up analysis. Top down analysis includes explaining, analyzing the macroeconomic condition and then how it would affect the industry condition on the businesses, and from that industry analysis, how would it reflects in the business operation and how it affects the profitability of the company itself.
Jadi dengan demikian dari top down analysis ini kita bisa melakukan.
So from that top down analysis, we could actually determine our asset allocation and what kind of sectors will prevail in this conditions, how the in this macroeconomic condition, what industry will be outperforming the other sectors of the financial industry. And from that sectors, then we could be more specific and determine which stock and which company to choose from that horizon of industry that we have chosen before. From that, we can choose the optimal stock investment allocation. For example, if we want to invest in the financial sector, and the infrastructure, or we want to invest in the infrastructure sector, so from that industry, we will analyze which one is the best company on that investment horizon. For example, we're going to take telecom from the infrastructure industry because it would be the best performing from our point of view. So that is top-down analysis as in a nutshell.
Pada prinsipnya kalau kita bicara stock investment,
so how are we going to do our stock investment? It will be related to how we're going to do our analysis and how we're going to value the stocks of our investment.
Yang mana value saat ini gitu kan ya. Jadi nah di dalamnya termasuk ada dividen. Dividen itu kan sebetulnya adalah pencairan pada suatu waktu tertentu.
How are you going to take a look at the value of the company, which is the current value of the intrinsic value of the stock?
Kita terhadap prospek bisnis
The stock value, the current stock value is actually related to the future expected return. How is the stock will be going to perform in the future?
Kita punya keterbatasan gitu ketika kita akan investasi.
Eventually, we'll have some disability, some barriers to do our own investment analysis because not all of us are able to have proper knowledge to do investing.
Kita bisa menggunakan orang lain untuk
So, how to solve the problem is we're going to actually utilize the other experts' knowledge. For example, we're going to take a look at other people's expertise to help us invest in the stock market efficiently and effectively.
Expert ini dalam dua konteks investasi. Jadi kalau kita bicara investasi itu kita ada dua cara, ada yang namanya active strategist dan ada yang namanya
in this investing, majorly we have two kinds of strategy, which is passive investment and active investment. Passive investment means that you're going to invest in asset related to strongly related to an index. So you're not going to choose a specific stock or specific investment, but you're just going to follow some index that you have chosen before. For example, one of the asset investment that you're going to use is the index mutual fund. On the other hand, we have active investment, which is what most of the experts are doing, which is they would it is expected that they would choose what kind of investment that they will do specifically. They would choose some company, for example, company A, B, C for it to include in their portfolio, and this is what most of the experts do.
Selanjutnya kalau kita mau investasi sendiri seperti apa gitu, kita juga tetap bisa melakukan passive investment.
How about what we're going to do when we want to do our own investment?
Kita bisa
we can do our own passive investment by building our own portfolio that is similar to an index that we have chosen before. For example, if you want to take the index of Serikahati index, then we're going to buy all of the company that is included in the Serikahati index.
Kalau kita ambil 5 saham terbesar market cap-nya di Indonesia, itu sudah 31% dari IDX gitu. Artinya
or even the most simple way to imitate index in your portfolio is simply buy the 5 biggest company with the biggest market cap in the index, and that would just replicate the almost 30% of the index itself. And if you want to go further, you can buy the 10 biggest market cap companies in the index itself, and it would have reflected 41% of the Indonesian index. And it would the return of the portfolio would be highly similar to how the index will be performing. But some people want more risk to that they would prefer more risk to investing. So therefore, if they have the expertise and they have the belief that they would perform better instead of the index, they could do active investment. It is broadly defined into short-term investment and long-term investment.
Kalau yang short-term itu dekat dengan trading gitu ya. Jadi range-nya itu mulai dari day trading sampai mungkin 6 bulan 1 tahun dari investasi. Tapi
active investment I would always categorize it for a short-term investment of between 6 months until 12 months.
Harapannya dapat cuan yang besar. Jadi ini yang kadang-kadang menjadi
some short-term investment sometimes even are below 1 week.
Untuk 20%, 30%, 10% mah kecil gitu. Sementara kalau kita lihat 10% dalam waktu beberapa hari itu menjadi sangat besar kan dalam 1 tahun.
For example, if you would expect a smaller return on this short-term investment, for example, just 10% or even 20%. But in the long term, if you could multiply it by in the long-term period, it would generate high returns in the long term.
Dengan demikian, awareness kita untuk udah kita bisa untung besar, bisa juga rugi besar gitu ya. Itu ada gitu. Nah, karena risikonya yang tinggi gitu ya, tentu saja
because of its high risk
appetite
appetite,
ini kecil gitu ya. Walaupun semakin muda usia dari investornya, bisa saja porsinya
most of the time,
besar dibandingkan
this kind of high risk investment should be allocated just a small portion of our portfolio.
Kita. Dan kemudian kata kuncinya ketika kita berinvestasi yang jangka pendek ini, yang sangat aktif, trading harian.
So the keywords on this kind of short-term investment is actually we need to determine our target price.
Disiplin.
If the stock price has reached this target price that we determined, then we should sell on the stock. But we should not bring our emotion that when the stock prices rises, we will hold on to this as long as its price increases. But we need to be discipline on this target price setting, and as long as we have reached the target price, we need to control our emotion and actively sell the stocks that have the target price.
Kemudian yang berikutnya kalau kita mau bicara tentang long term gitu ya.
And then to the next one, if we're going to take long term investing,
ini karena memang yang namanya saham ini identik dengan investasi jangka panjang gitu ya. Yang namanya investasi jangka
so
panjang
long term investment is always related to long.
Ternyata dia tidak
taking a long look at the horizon
ketika dia diinvestasikan dalam
from 1 until 3 years.
Kalau bicara tentang investasi saham di Indonesia gitu ya, ada suatu penelitian yang menunjukkan bahwa ketika kita berinvestasi dari 1 tahun ke 3 tahun gitu ya, itu total risk kita itu turun setengahnya.
In Indonesia, there are some studies that shows that if we're investing from 1 to 3 years, investment, our risk would much more decrease.
Jadi dengan waktu yang dengan bergerak dari 1 tahun ke 3 tahun itu risikonya sudah turun setengah. Jadi dengan demikian maka kalau kita bicara tentang investasi saham maka kita harus berpikir bahwa ini adalah investasi jangka panjang. Dan kalau kita bicara investasi jangka panjang, maka tadi sudah dipaparkan oleh
long
kita perlu tema, bagaimana tema dari investasi ini ke depan. Dengan demikian, maka kita akan bisa menyusun
Herald mentioned before, we have to determine our investing theme in the long term. What kind of themes will prevail in the long term? What kind of themes will be popular in the market? And we're going to invest on that theme that we have set before. And then we need to note on the diversification of our portfolio and also our sector.
Milenial gitu, kaum Z itu sudah bisa berinvestasi keluar gitu ya. Jadi dengan seperti paparan Pak Herald tadi,
and other types of diversification is actually to diversify our portfolio into the global market.
Sudah jauh menurun. Dan kemudian projection.
If we have, for example, if we want to invest globally, for example, just taking a look at diversifying our portfolio in the Asian market, the risk of our portfolio would actually decrease significantly.
Yang ada yang tidak cuma di
So again, diversifying is not only just in sectors, but also in industry, but also in the market itself. Which is, if we want to, before we want to invest locally, but now we can invest globally due to the globalization that has occurred upon us. And again, in our investing, it is very related to our psychology, which is related to greed and fear. For example, when market collapses, it would affect our psychology because most of the time the bubbles are related to the fear. So therefore, when the market behaves irrationally, investors should examine whether this market is actually reflecting the own value of the market and the company inside of the market, but whether or the market is actually acting irrationally with the greed, amplifying most of the values of the company.
Barangkali itulah opportunity kita untuk bisa mendapatkan saham-saham.
So, for example, when the market crash, it would most likely cause panic for most of the investors. So, we would determine how to maintain our ability to be affected by those markets. There are a lot of tips that Mr. Herald has given in the book.
Salah satu yang menarik itu adalah spend time thinking.
one of the
Jadi,
most
udah santai aja gitu.
interesting point that
Market
I
mau
would
kemana kita
highlight.
slow aja gitu. Dengan slow itu kita akan bisa berpikir dengan lebih cepat. Kita nggak
It's
bisa
to take it
kita
slow,
bisa melihat
to spend time and
secara-
thinking slow,
secara jelas apa yang
because
nantinya mesti kita lakukan.
if we
Kemudian
take it
be
slow, we could
optimistic.
just think
Karena
clearly,
yang namanya
and it
ekonomi
is better
itu
to do
berkembang
our
dengan baik.
investment
Ekonomi
without
sekarang
any
itu
hurry
jauh
and
lebih
without
dibandingkan
greed and
ekonomi 2-3
fear
dekade yang lalu.
in the
Jadi kita
time of
optimis aja,
losing
kalau
our
sekarang
money.
kelihatan jelek, insya Allah nanti akan baik. Kemudian yang ketiga adalah
And the second point is to
kita
be
selalu
optimistic
meyakini
that
bahwa ini
how
investasi
to
jangka
always be
panjang
optimistic
gitu,
on
nggak seketika gitu. Jadi
what would happen in the
sekarang
future, and
ini
be
kalau lagi
optimistic
jelek, ya nggak apa-apa,
that's
at
going
least
to
kita diamkan aja nanti
happen
akan bagus.
to the economy.
Atau bahkan mungkin ini adalah opportunity kita untuk bisa mendapatkan investasi dan dengan murah dan tentunya akan bisa menghasilkan
and second point, so the third point is actually to do a long-term investing. For example, when a market crash, sometimes you need to be patient and just take a look at this as an opportunity to invest in a cheaper condition where you can buy most of the stocks at a discounted price.
Kira-kira demikian.
And the last point is to actually be a learner and be always learn on
Terima kasih banyak Pak Agus.
any kinds of materials that you can gain.
Pak Agus, thank you for the wonderful presentation. I think we can learn a lot about how we can construct our investment policy, and then what factors that we should pay attention if we want to talk about investment. So our next speaker, we have Pak Dandi Rafitrandi. He is the researcher at the Department of Economics, Center for Strategic and International Studies, or CSIS. His research team focus on international trade and regional integration, and also digital economy and technology. Pak Dandi will explain about the development of stock markets in Asia, and also, this is the very important factors that we have to pay attention. We will also talk about the future or the factors that will shape the futures of capital markets. So Pak Dandi, please share us your insights. The floor is yours.
Okay, thank you very much. So I hope that the my presentation is already there. Is it visible?
Yeah.
Ms. Aulia? Okay,
yeah.
Thank you very much for the introduction, the kind introduction. So first of all, I would like to congratulate Herald as the author of the book. I think this is very enlightening for me personally. I think it is like traveling through time and places to all over Asia, and having Herald as your tour guide and explain how things developed, especially in the stock market, both in good and bad times. And I also, I think I saw some of the way forward in terms of how the stock market in Asia will develop in the future. I personally like the third chapter of your book, Herald. I think you give your personal touch in your explanation, and I remember one of the quote is that the investing in stocks is actually an emotional business. So because I myself a beginner in the investment, actually Agus and Herald probably already explained in a more detailed manners, and also more technical about the stock market, but I'll try to sort of like fill in the gap between explanation of Herald and Agus. Hopefully it will be beneficial for all of the participants in this forum. Next, please. So this is just the some of the things that we will discuss in my presentation. I will discuss the development of the stock market, and also I will touch a bit about the politics and social economic perspective, the rise of the retail investors, and also we will finally discuss the future of the stock market in my personal opinion. Next, please. So if we're looking at the development of stock market in Asia, this is actually, I hope you can see it clearly, but this is just two variables that I took from the World Bank indicators development. database. So there are two variables in the X and Y axis, which are the ratio of the total outstanding credit to GDP, and also the ratio of the total market capitalization of listed company to GDP. So both are actually divided by the GDP, so it's in the percentage. This analysis actually shows that you can see at the right side, the Singapore and Malaysia have quite a high stock market capitalization per GDP ratios, amounting to financial structure that are very close to those, for example, United States and United Kingdom. On the other hand, if you look at the left side, you can see that Thailand, Vietnam, and China all have financial structures that are actually more dependent on banks. And also Vietnam, in particular, has seen a sharp increase from 2004 to 2014. In particular, the sharp increase in indirect financing, which is the stock market. And also, finally, you can also see the development in Philippines and Indonesia, which is sort of like level off or even fallen in the recent years. So this is just to give you a insight of how things actually changed in the last 10 years, although is this not the very recent data. But as you can see that the Indonesian data is not really as dynamic as other countries in this graphics. Move on to the next one, please. So this is just, yeah, next please. Yeah, so this is just the market capitalization that we already talked about. As you can see that in Indonesia, the market capitalization, which is the share price times the number of the shares outstanding for the listed domestic companies, are sort of like a bit flat in terms of the growth. As you can see that in 2005, it's only 28.5% per GDP in terms of the market capitalization, but in 2020, it's only 47%. So as you can compare with other countries as well, you can see Singapore probably the outlier of the chart, but for example, other countries such as China, also Thailand, Vietnam, I think they are more dynamic than Indonesia in terms of the market capitalization. And the next one, please. This is just the number of the listed domestic companies. Yeah, I think next one, please. Yes, so this is the number of listed domestic companies in each country in terms of in the stock market. This graph actually explained that for Indonesia, I think the growth of the listed domestic companies in the stock market is quite remarkable, the growth. So I think there are quite a lot of potential in the future in the stock market in Indonesia. So moving on to the next slide, please. So yeah, this is just to give a brief illustration of how things actually changed since 1990 to 2020. As you can see, in 1990, there are, in terms of the share of the top 50 of the top 50 companies by value added on the stock market capitalization. So we compared between, this is actually an article from the Bloomberg. As you can see that it's quite different if we're talking about in 1990 to 2020, where you can see that, for example, the Chinese company is not there yet in 1990, but in 2020, they actually have 8 out of 50 top 50 companies in terms of value-added stock market capitalization. So that's actually shows that how dynamic the Asian market is. And the right side, I'm just showing you that the change of the domestic market capitalization comparing between 2019 and 2020, and I think that from Agus and also Herald says that the stock market, even we know that we are still in the pandemic, they actually give the investors a good number of return in the year of crisis. So yeah. As you can also probably you want to note it, the previous one still. The previous one. Yeah, just as the last thing that I want to mention, that the type of the companies that are actually listed in the top 50 are actually changing, right? So it's actually changing from the big oil and natural resources to big tech. Next, please. So we're just gonna go with the Indonesian case when we have the rising number of the retail investors in the country, which is already risen to 1.2 million as of June 30. I think this is 2020. Increase around June 30. I think 2021. I'm sorry. Increase of 12% from December last year, which is 2020, or about 15% of those investors actually aged between 18 to 30 years old. So you can see that there are quite a lot of, significant increase in the number of retail investors in all sectors. For example, in the stock markets, we can see there is a increase in 56%. The mutual fund 82%, also 46% for the government securities or SBE. I myself actually probably one of these examples, because I think I'm more actively investing in terms of the mutual fund and stock market in the pandemic era, which is in 2020. So yeah, that is actually very very interesting. But next slide, please. So this is just the question about, so if you have quite a lot of increase in retail investors, and that they're getting quite young in terms of demographic. So whether the question is whether they actually have a higher literacy, and also whether the stock market are actually more inclusive in a way. So this is just some of the indicators of how you actually measure the financial literacy and inclusion in several countries in Asia. But as you can see, I'm just gonna only point out Indonesia as a case. So you can see that the variance or the variation of the financial inclusion measurements and some of the variables that I use here, for example, whether the people actually save at financial institution, and also break down by some of the demographic profile, for example, the age, the income, and also the area of their location, which is rural or urban. Probably the most significant one is the poorest 40%, and also versus the richest 60%. So, of course, it is actually very straightforward, because the richest 60% might have more literacy in terms of financial and also investment. So I think one of next slide, please. One of the most interesting part of Herald's book is actually he said that the stock market is not the economy. Yeah, I think I'm totally agree with that. But this is just to show what the relationship between the stock market and economic growth in Indonesia. So just plotting the graph for the IDX Composite Index and also GDP, and there are quite a bit of the correlation between those two, but the dynamic is not still there. The IDX, of course, it's more dynamic. But the question is this a good thing or a bad thing? I think that's a more more discussion we should have more discussion on this, because as the next slide, I explained that there is also a sort of like a politics and social economic perspective on this question. Probably next slide, please. Thank you. So if you remember, probably in 2011, there is this movement called Occupy Wall Street. So I think it is very important to know what is actually relation between the stock market and also economic development because if this is not the thing that we are going to address in the future, this will be, you know, the 1% versus the 99%, us versus the Wall Street versus the other street, for example. So I think this is the part of the discussion that I think we should discuss more in terms of what is the connection really between the development of the stock market and also development in the economy. So whether if the stock market actually influence the economy. So I think that's more interesting for me as a researcher in economic area. So I think I'm just gonna close my presentation by giving some of the, you know, this is not the legit prediction of what's gonna go or what's going on and what's gonna happen in the next 10 or 20 years. Next, please. But some of the variables that I've been identifying are, for example, the demographic structure of Asian countries, which are already discussed by Herald and also by Agus. We know that the rise of the middle income group in Indonesia, in Vietnam, and Thailand, and actually other ASEAN countries are actually the potential that we should utilize in a more concrete way, for example, in the stock market. But also we have to take into account the different demographic, you know, the aging population that actually happen in Japan, Thailand, and that's two countries that we actually already see the trend. So I think it will be matters quite a lot in terms of how the stock market will develop in the future. That's number one. The number two is how large the financing gap that the Asian country will have. I think if we will have more infrastructure projects in the future, for example, that we might need to have more deepening in our stock market, and also more options on the stock markets and other investment derivatives as well. And the other two variables will be, the first one is the next slide, please. The development of the financial technology. Of course, I think we also have discussed about this, because nowadays we have quite a lot of options other than stock market, for example, cryptocurrencies, NFTs, and other, you know, the digital currency as well in the future. That's probably will change the investors, both from the firm side and also the investor sides, how they think and how they're gonna react and their behavior as well. And the last but not least, this is about the sustainability, which is the ESG concern. I think we can see that the trend will be in the next few years. Many investors will be more concerned about this issue, and I think the firm will also see this opportunity to have to raise money from the stock market, but you know, in a more environmental and also sustainable, a friendly way. So I think that's gonna be the future and the next trend of the stock market as well. With that, I will stop there, and I hope that my presentation is beneficial for all of you, and I'll go back to the moderator. Thank you very much.
Thank you very much, Pak Dandi, for the insightful presentation. So at this point, we do hope that the audience have more better understanding on the history of capital market in Asia, and maybe gain some new insight regarding the predictions of Asian stock market in the future. So because we are at the end of the keynote session, we will have the Q&A session. So we do encourage you to actively participate in the Q&A session because we will have 15 giveaways to be given to the 15 lucky questionnaires. So ladies and gentlemen, we are now entering the Q&A session. And we already have some questions in the chat room, so let us dive into the first one. Okay, I think we will still waiting for the host to present the question. So before that, Pak Dandi, I just want to ask you something. So you do say that when we're talking about the capital market, sometimes the capital market is not really a good indicator of the economy. What do you think in the case of Indonesia? Is that the case in Indonesia? Can we consider that Indonesia capital market is the reflections of Indonesia economy?
Yeah, probably Herald and Agus can help me to answer this big question. But I might agree in some extent that we cannot really see both stock market and also, for example, economic growth in the same bucket of indicators, because I think I met my friend while back in the crisis in the pandemic, and she actually says that, well, yeah, we're in the capital market. We don't really see a crisis. I mean, they have actually a good time back in when we're still trying to find a way out how to deal with the pandemic. So that's got me thinking that I don't know whether this connection between stock market and also the economy is actually a good or bad thing. Yeah, this is not a question that I want to answer, but probably Herald and Agus can explain it more clearly than me.
Yeah, if I may add a quick comment.
Sure, yeah, please do.
So indeed, I wrote in my book, stock market is not an economy.
Yeah.
The reason actually is because, in particular, in some markets in Asia, it's the case. Taiwan, for example, the local economy is not really reflected in that market. And I think it's sometimes wrong for people to think, oh, this happens with the economy, therefore the market should be good as well. The economy is good, therefore the market should be good as well.
Right.
That is not the case. In Indonesia, it's a better reflection of the economy than, for example, in Taiwan or Korea. There are more kind of domestic-oriented companies in there. But still, the banking sector is really big. It's big in Indonesia, but agriculture, which is a decent size of the economy, is not really reflected there, right? Also, the other reason why I mentioned that is that if people talk about and say, for example, to somebody, what do you think about the stock market? Says, well, the economy is strong. He implies that that is good for stock markets. But if that means that, for example, the interest rates, the bond yields go higher, it could be negative for stock markets. And therefore, I prefer to always go back to think about stock markets as discounting machines, or in finance terms, simply as large discounted cash flow, DCFs. You take all the companies and you DCF them in a sense, and look at it from the ground up. Don't take too much of an economic point of view.
Okay, Mr. Herald, I think that is very interesting point of view. And also, I read from your book about the market misconceptions, right? And then how people are getting confused of how the pandemic, like the stock market is up, while the economy is like going into crisis, right? So can you maybe share some thoughts about that?
Yeah, actually, I liked some slide that Agus had on some of the sentiments that also plays in the market. So when we had the COVID happening, people need to figure out what's going to happen with the stock market. Again, we look at profits, we look at bond yields. Now, COVID, the belief was that a lot of businesses were not going to do so well, so profits come down, that's negative for stock markets, and the stock market sold off. What then happened is that central banks came in and said, well, we have to do something. We're going to push interest rates lower. And we've seen bond yields coming lower. And that I mentioned is a positive for stock markets. So somewhere in the middle of 2022, stock markets started to rally again. It was led up, I think, by the US at the time, and China actually here in Asia led that in the beginning as well. there were a lot of newspaper articles saying, well, the economy is doing so bad. How can stock markets do so well? And again, that's looking only at the economy, but you've got to make that step and say what happens with profits and with bond yields. And of course, then also sentiment comes in. And as I mentioned, I think Agus had a nice slide in there showing Homer in fear. As the market goes down, people get worried. They're losing money on paper. It feels bad every time you look at the market, and you get some accelerated selling, right? And that sometimes exacerbates, makes things even worse in markets. So they overshoot and overshoot. We've seen that last year, for example, in Chinese internet companies. They did phenomenally well in 2020 and overshot. And well, when some better news came out, they had to come down in 2021. So that's something to keep a little bit in mind as well as these markets move up and down.
So very interesting point of view, Herald. I guess we already ready to present the questions from the audience. Not yet? Okay. Because we will still waiting. I think we have technical problem and presenting the questions from the audience. So while waiting, okay. So we have the first one, Pak. So to Mr. Herald, what do you think about the risk of China government intervention on the China companies listed in the Hong Kong, US, and especially tech companies with more and more tightening control like Alibaba, Didi, etc. This is from Donny Justin from Pundir.
Okay. That's a very good question, because that's been the key driver actually in the Chinese stock market this year, and probably by extension has been a key driver of Asian markets as well. We've seen over the last 12 months regulations coming in Chinese internet. You probably read it as well, that they said there should be limits on how long children should be on playing games. There's been investigations in IPOs that Alibaba put in place. All kinds of new rules have come out that severely impacted these internet companies. And these these stocks came down a lot. And because they are the largest stocks, in particular in the Hong Kong, the H-share market, the Chinese companies listed in Hong Kong, that market was really dragged down. Some of these stocks are down 70% or so. By extension, actually, it also meant that people wanted to get their money out of China, and they moved to other markets, initially to India, because India is a market that's got a low correlation with China. And actually this year we've seen money flowing into Indonesia for a variety of reasons. One of them is that people still don't want to go back to China, and India had already performed so well. So some of the money arrived in Indonesia as well, though in Indonesia I think some really interesting domestic trends are unfolding as well. But to go back to the question, will that continue? That might well continue. These are things you can't really forecast. We have to assume that the government wants to continue to regulate all sorts of industries. We've seen this in the past with telecom, with gaming, with all sorts of other industrials, banks. So that will continue. On the other hand, some of these stocks are down a lot. And as I mentioned earlier on, we got this sentiment, fear and greed, that was so nicely illustrated in one of our other slides. Fear and greed, and sometimes markets overreact as well. As they overreacted to the euphoria in China internet last year, they might well be overreacting to be very negative on future regulations for these stocks as well, because these stocks have priced a lot of that risk already. So there might well be opportunities around in that sense. But yeah, these industries get regulated, will probably be regulated. I do think regulations come in cycles. Policymakers then put regulations in place and maybe take a year to see how that reacts. So maybe next year it's going to be a little bit less intensive as it was last year. And that has a major impact on the Chinese market move, but also India and Indonesia, amongst others.
Thank you, Pa, for the insight. So do you think regulation is good for capital market? In which context do you think it will be supporting for the capital market?
See, as an investor, you might say, I don't want industries to be regulated. I want companies to do whatever they want to do, and so they can make as many profits from me. That is, to a certain extent, correct. You'd like companies to be a monopoly, so they can do whatever they want. As a consumer, that's not what you want. If you go out and buy a car, you can only do to one company in the whole of Indonesia buy a car, and they prices them at ridiculously high prices, then as a consumer, that's not good for you. The governments need to look at consumers as well. And I think it's actually sometimes good that industries get healthy regulation. Yeah, it means that share prices move up and down, but you need to regulate. We've seen that industries, including the finance industry in the past, being not regulated, has created all sorts of problems. 2008, we had a financial crash. Indonesia had its own Krismon a long time ago, 97, 98, partially maybe also because certain things weren't properly regulated at the time. So regulation is good. And if you look at, for example, the US, and you look over the last 100 years or 50 years, that market over the longer run has performed very well, despite the fact that a lot of these industries have simply regulated. So I'm not overly worried about that over the longer run. And I think this also came out of Agus' slides. It's very important, I think, try to look at these things on the longer run. You can reduce your risk, he said, by half by just investing in things on a 3-year basis instead of a 1-year basis, let alone on a 1-hour basis or 1-day basis. So take a longer term view, and some of these regulations shouldn't be as much as a risk as they initially appear to be.
Okay, thank you, Pak Herald, for the insight. So now we will have the next questions. So the second question is for Pak Agus. For Pak Agus, I would like to know how the tapering will give an influence in Asia stock market, and what are the suggestions to investors and traders in Asia stock market? Thanks in advance. This is for Abdullah Emir Pramudia.
Okay, I think the question is more for Mr. Herald, because he's the one that strategist here. But well, in my opinion, regarding the tapering that we'll do by the U.S. Federal Reserve, I believe that the impact is not as big as what happened in the 2012-2013, that can make global impact also in Indonesia. So I believe that even though that it is now more certain that they will do the tapering because of the inflation that's quite high in US, but they will do it carefully, and then also in other side that it is, I believe it is already thick in price for the valuation of stock in Asia now. So even though it will happen probably in probably in the half of next year, I believe that the market in Asia will be relatively remote from the impact of the tapering. So what should we do in investing in stock? I still bullish on long in stock. So compared to the bond and also money market, because of the increase of the interest rate that happened in US, probably is not really followed drastically by the country in Asia. So the country in Asia will still benefit from the low interest rate, and then high prospect on the company that will benefit from the improvement on the economy post the pandemic. So that's probably my opinion. So it's still long in stock in Asia, and then find the theme like what explained in the book by Pak Herald, and then yeah, I think that's my opinion. Probably Pak Herald can help me to explain further.
No, I actually completely agree. the fact that we have this question means that we are talking about it, and this is the issue. It is not a surprise. In 2012-13, we had a similar situation. That was a surprise, and the market reacted to this. Historically, Indonesia has been quite sensitive to this, but Indonesia at the moment is very different from a macroeconomic point of view than it was 7 or 8 years ago. So I think if we see a sell-off in Indonesian equities because people worry about tapering, I would consider that an opportunity to say this is probably a good time to buy. I fully agree with Agus. Indonesia actually is in a better state. It's well anticipated. It shouldn't have as big as an impact as it had in the past.
Okay, so thank you, Pak Herald and Pak Agus for the answers. So we will now have the third questions, and this is dedicated to Mr. Dandi. Mr. Dandi. Pak Dandi, how to read and predicting stock market will be gain or loss for the newbie investor? Thank you. I think it can also be answered by Pak Herald and Pak Agus. But let's give the first opportunity to answer the question to Pak Dandi. Pak Dandi, what do you think that we can do to read or predict the stock market?
Okay, thank you very much for the question, and of course, I think that is also related to Agus' presentation. I think, but let me share my experience as a a beginner in this investing environment. I think it is especially in the stock market, it is very important to for all of us to know the fundamental of the stock itself. If you choose to buy some stocks, you have to really understand what's actually behind that price of the stock. Whether you want to buy it at the the lower price or higher price, you will have those sort of like expectation what will gonna happen in the future, right? So I think I cannot tell how to actually predict whether it's gonna be gain or loss. Otherwise, I'll probably already a billionaire right now if I know how to do that. But yeah, I think choosing wisely your stocks will be very beneficial for you, and then also really know your risk profile, whether you want to do this investment as a as a trader or a short term, or you want to have this investment in the more longer term to sort of like match with your financial objective in 5 years or 10 years. That's actually the best way to really find out what kind of stocks that will give you the most gains or most benefits for you. I think that's all I can say.
Okay, thank you, Pak Dandi. Pak Herald, do you want to add something to the answers?
Yeah, I mean, actually, I'm going to say something that was in Agus' presentation as well. If you're a newbie investor, take the money that you don't need for the next 3, 4, 5 years and put a large chunk of that simply in a passive fund. That's an ETF or a mutual fund. Don't try to go and do things yourself. If you want to do it a little bit, but do a large fund, simply very passive. Don't sell when the market falls 30%. And don't either sell if the market goes up 30%. Stick with it for the longer run. As if you buy a house. If you buy a house, you're not thinking about selling it next week either. So think long term. Put money that you do not need in the next couple of years in a large chunk of that, put it into stock markets. If you want to dabble into individual stocks, do only that very limited at the very beginning with companies that you understand very well. And my very last advice is my book was written for people like that. So get a copy and take a look at it.
I agree with you, Pa. I think reading your book will give the investor, particularly the newbie investors, and get an understanding of the market or how the market works. So I think I do agree with that. Please read Pa Herald's book. Okay, Pa Agus, do you want to add something to that?
Okay. If you want to avoid like big loss, something like that, do the diversification. So don't put all your egg in one basket. So if you do this one, even though it's quite cliche, but it worked. So just do the diversification, so it can mitigate the big loss that you can get from the stock market that can make you nervous and panic. That's what I can add. Thank you.
Thank you, Pak Agus. So, gentlemen, now we have like the big questions. This is for all of you. The fourth question is for Miss Dea Setianing, and she asked that how to know if the market is to collapse, then how to prevent before the market crash or collapse. So, maybe I will start with Herald first.
I think we got to assume that sometimes we just don't know these things. We can't predict these things. And that comes back. You diversify, as just was mentioned. You stick for it from the longer run. If you look at, for example, take US stock market here. Over the last 100 years, if you would have invested 100 years ago in that market, of course we weren't around, right? Your average return would have been 6%. Oh, sorry, 8%. 8% a year, including dividends. If you would have invested 50 years ago, it would have been 8%. If you would have invested 40 or 30 years ago, it would have been 8% as well. So in the longer run, this is what you can expect. If the market goes up or down, that's part of the game. So you just have to understand we can't predict it. If we could predict it, then that would be helpful. Now, that's not a fair answer, because my job is to predict markets. My job is for HSBC to say this is what I think is going to happen. Looking at sentiment is extremely important. If everybody is really positive, and even your taxi driver in wherever the lady is, let's say she's in Surabaya, even the taxi driver says you need to buy stocks, you're going to be careful. If everybody wants to go into it and everybody is really positive on it. And conversely, if everybody is really negative, I can tell you a story of a friend of mine who inherited some money and went and bought Indonesian stock in the year 1999-2000, when everybody was super negative on Indonesia because we had just had Krismon and the banks didn't work and all these sort of things. And he's done very well. So one, assume that we can't predict it. Two, if you want to get a feeling for it, also look very much at sentiment, and it's one of the chapters in the book that goes into that a little bit.
Thank you, Pak Herald. Pak Randy, what do you think? What should we pay attention to? What factor that we should pay attention if we want to predict the market collapse?
I have to agree with Pak Herald as well, because if you want to stay for the long term, for the long run, I think you should not avoid the market collapse, because I think that's actually the time that you can actually add more investment and then trying to get more stock price with the discounted price. So I think that's the in a way to say this in a very in a good way, because the market collapse, of course, it will bring all of the prices, the stock prices down. But on the other hand, you can actually see the opportunity to adding more your stocks or other options as well. And that's all.
Thank you, Pak Randy. Pak Agus, do you want to add something?
Yes, it's really difficult to forecast when the market collapse and how long it will collapse. But probably we can do something to face this condition. If we there is some research that calculate what is the return in Indonesian stock market since 1990. And then the return from 1 year, 3 years, 5 years, and 10 years, the average return from that kind of investment is around 13 to 14% per year. So like Pak Herald mentioned, that be optimistic first, and then the second one, gather the information. So it's really important to read the research that doing by expert that help us to see the condition clearly. So it will help us from the panic selling that usually was pressure on us when the market collapse. And then the third one, we can do the investment periodically. We call it cost averaging. So let's say every month we are buying stock, or every month we are investing in our portfolio, or every 2 months, 3 months. So, but in every condition of the market, we are investing, and then we will not left behind from the investment, and then we can take the opportunity when the market collapse, and then we will get the result from our long-term investment. So do the cost averaging.
Thank you. So, gentlemen, before I close the sessions, I really want to hear closing remarks from you. So, please prepare a closing remark in 1 or 2 sentences to give insight for the investor that's joining us today. But before that, I really want to address Pak Herald like one last question. I just want to know, Pak, in your book, you said that sometimes when the market is in the stage of the crisis or revulsion, it is like an opportunity to enter the market. So, for example, after the Christmas, even in Indonesia. So, can you like share more insight on that before we have the closing remarks? Thank you.
Yeah, when there's a time of aversion, I can give you a couple of examples, but I think actually in China, we're at the moment at the stage where people are very negative on China for a variety of reasons. Domestic economy is weak, the property sector is weak. We've spoken about some of the regulations that have hit the internet sector there. Last year, people were very euphoric about China, as I mentioned earlier on, somewhere China in 2020, in the second half, was one of the best performing markets. So we've gone from euphoria all the way to what we can call aversion or repulsion, people being saying, you can't invest in the stock market, it doesn't work. And history tells us that, in particular in Asia, that gives you great opportunities. Actually, I used to be based in Jakarta as an analyst in the late 90s. I covered banks, amongst others, also industrial companies, and nobody wanted to invest in banks at the time. I remember you could buy companies like United Tractors for 25 rupiah or 50 rupiah, something like that. Now it's over 4,000, but everybody was seriously concerned that these companies would go bankrupt. The one person that did buy it at the time, and as I said, a friend of mine was one of them, these people have done very well. So reading the psychology of markets is really important. So therefore in the book, I've not only tried to go through all the individual markets, but also put a whole chapter on it, on how that works and how that's worked in the past, and what lessons we can learn from that.
Thank you, Pak Herald. And maybe closing remarks in 1 or 2 sentences for the investors joining us today.
The closing remark?
Yes, only 1 or 2 sentences.
I think the closing remark would be, my advice is to people, if you have money that you don't need for the next couple of years, put it in a fund that diversifies, as Agus mentioned as well. Stick in it for the longer run. Do not think you're going to sell for the next 5 years. And therefore you become an owner of very profitable companies in Indonesia or in the rest of Asia. And I think in particular younger people should do this and really hold on to it. If you want to become financially independent, and I've yet to meet people who do not want to become financially independent, you need to invest. And if you need to invest, you need to invest in equities. And if you want to invest well in equities, you need to think about these things in the longer run and stick with it. That's my closing remark.
Thank you, Pak Herald. Pak Agus, please, we really want to hear your closing remarks.
Thank you. The closing remark is be a learner and invest periodically. Do the cost averaging. Thank you.
Thank you, Pak Agus. Pak Dandi, how about you?
Probably just add to all the speakers say that last but not least, please read Pak Herald's book.
Thank you. That's a good remark.
Yes, this is a very good remark.
We agree.
Agree with that, because it's very enlightening book. So if you really like a newbie in the capital market, we do really recommend you to read the book, because as Dandy said, is basically has a lot of story and a great analogy to make you to understand what happens in the capital market. So I think as a newbie investors, it can be a good reference for you to read the book. So thank you, gentlemen, for the insightful presentation. So it is an honor to have all of you here today. So we have come to the end of this sessions, and I would like to show our greatest appreciation to our keynote speakers for this afternoon. And I would also like to thank everyone who has attended today's event, and to many participants who were actively involved in the Q&A sessions. We now have come to the end of the Q&A sessions, and I would like to invite our MC back to continue our event this afternoon. Owen, back to you.
Hi, thank you, Ms. Aulia, for guiding a very well. Thank you to all the speakers. And now we have to proceed to the next event. As promised earlier, there will be 15 giveaway questionnaires who will get Periplus voucher as big as 100,000 rupiah and the book Discusspedia, Terminology Business Contemporary book. And we're going to announce the 15 lucky winners now. If the committee would like to bring the list of names, that is the lucky questionnaires for today's presentation. Okay, here are the 15 lucky questionnaires. Congratulations to all the giveaway winners, and our committee will privately contact each winner to explain about the giveaway giving process. Once again, congratulations, and please do note if your name are listed as the giveaway winners. Okay, ladies and gentlemen, we have come to the end session of discussON 2021 SBE webinar series number 2. Battling the myth of Asia's stock market, the past and the future. Before we close the webinar, may I once again invite the 4 of our honorable speakers, Mr. Herald, Mr. Agus Salim, Mr. Linde Rafitrandi, along with our wonderful moderator, Ms. Aulia Nurul, together and take a picture with the 5 of us together. I would like also to invite all of the audiences today to turn on our cameras, because we are going to take a picture together with the most amazing speakers that have visited Prasetiya Mulya today. So I'll give a minute for everyone to turn on their cameras. And for all the speakers, please hold on to your smiles for some seconds, because there will be several pages on this screenshot. So do show your best smile, and please wait a minute as the operator will take the screenshot. Okay, once again, I think most of the audiences have turned on the camera. I will give another minute for everyone to prepare and give your best. Please give your best attire for today's presentation. Okay, I think everyone's ready. I will count from 3 to 1. Okay. Okay. Everyone's ready? Okay, great. 3, 2, 1. Please hold. Okay. Okay, on to the next page. Okay. 3, 2, 1. Another 1 minute. And 3, 2, 1. Last one. And 3, 2, 1. Okay, great. I think the operators has got all of the screenshots and for the documentation for today's event. Once again, thank you, dear all honorable speakers. I wish you abundance of luck and success in all your years ahead. Also, to our dear participants from all around the world, for our webinar Future Improvement, please kindly fill our feedback form by scanning the barcode on the screen, or click the link in the comment section, which will be provided by the community. I will give 1 minute for everyone to fill out the feedback form, and I would like to remind that the committee will only send certificates to participants who have submitted the feedback form. So if you haven't submitted the feedback form, you will not receive the certificate. I'll be giving a minute for everyone to fill the form. Once again, I would like to remind to all audiences, the committee will only send certificates to participants that has submitted and filled the perfect form. So I'll be giving a minute to everyone. Please do make sure that you have click the submit button in the form itself. I think the 1 minute is up. I guess that's the end of our perform session. On behalf of the committee, I would like to apologize for any unintentional wrongdoings during the webinar, and we hope this evening's webinar has shared valuable insights to all of us who are present today. We look forward to meeting you on our next discussON 2021 SBE webinar series. Thank you. Good afternoon, everyone. We kindly ask our participants to leave the room. Have a nice day and good afternoon. Bye.